Well, welcome everybody to our Long Options webcast. I'm Connie Hill, Senior Manager and Education Coach here at Schwab, taking over this spot from Rachel. We'll still see Rachel around doing some different things on with our team and some of her teaching, but her role has changed a little bit. So I am taking over this class, and I think it's a fun class to be involved in. Now, how many of you are typically long option traders? I should say that are long option traders. How picky are you? How much have you been paying attention to your reward risk ratios? All right, that's something we're going to focus on today, which is the idea that we have more in a potential reward than what we're risking on the trade. All right. Now, I am joined in the chat by Mr. Aloha himself, Mr. James Boyd, fellow redhead. The redheads have got you taken care of today. He'll be in the chat. He'll pick up some of the questions maybe I can't get to, but I will be keeping my eye on the chat here as well. Let's go through our disclosures and get on with our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for education and informational purposes only. Don't consider it a recommendation. We'll be using the Paper Money software application. That's what you download to your computer. It's the most robust version of Thinkorswim, and we'll be using it a lot here today. There are some differences in your Paper Money account and a live trading account. When we run into those types of things, we'll be sure to let you know about it. Past performance is no guarantee of future results. All right, for our agenda, we're going to talk about what long options are. We could have some newcomers to this class that are fairly new to different option strategies, so we'll talk about that a little bit. Whenever we're talking options, we're going to be talking about how price, time, and volatility impact the price of an option. Of course, we're going to be looking at some examples here today. And, you know, I do want to say, give a nice shout out to those of you that are here today. We've got such a good, friendly crowd. Lots of names that I recognize, so I'm happy that you're here. And if you're new, I'm happy you're here as well. Feel free to type a greeting in the chat so we can give you a proper, warm welcome to our webcast. All right, what are long options? Well, a lot of the time, it's one of the first strategies that we're introduced to as far as option trades go. And a long call, I think it's easy to relate to being long a stock, right? You're thinking the stock's going to go up, you're finding a technical point to get in that you think is appropriate, and we're expecting the stock to move and go up. So it's definitely a directional strategy. We need the stock to take action in order to be, you know, making out on the trade. Now, a long put, we're thinking we buy that if we think that stock is dropping. Maybe we've been observing a downtrend, then we might want to consider buying a long option on the put side of things. Options, long options, have one thing kind of going against them, and that's kind of the time decay element. These options decay every single day. And when I say every single day, meaning every holiday, every Saturday, every Sunday, they are decaying every single day. So we always have to be mindful of that, because that means, all right, we want this move to take place quickly. And if it doesn't, we might need to go ahead and adjust what's going on with the trade. Maybe we might have to even stop ourselves out of the trade. Now, these positions are what we call vega positive, which means if the implied volatility goes up, then typically that helps or expands the price of the option. And typically the most you can lose in these trades is what you put out in it. That's your net debit, which is really kind of a nice thing in terms of when you're position sizing, you're managing your risk, that you know what you're dealing with. All right, let's head on over to the Thinkorswim platform. And I wanted to see if any of you say, yeah, I pay close attention to my reward risk ratios. Anybody out there doing that right now? After our class today, I hope that you will be more cognizant of that than maybe what you have been in the past. Looks like SPX is down a little bit today. Not too big of a surprise with that huge gap up that we had yesterday in the big run. You know, sometimes we get a little profit taking the next day. So not too unusual. We're not down that much. The The NASDAQ's down maybe a little bit more than the S&P here. And so on it, what we might be seeing is, yeah, it's definitely down below the opening price that we had yesterday, being, kind of giving a little bit more of a bearish look there, at least on the day. It doesn't mean it's going to stay there. Doesn't mean it's going to close there. We still have a little bit of the day left, so we'll see. Okay, Will, you're paying attention to your reward risk ratios. Perfect. Virgil says I am really picky with my options. I like that. We should be pretty picky with our options, right? We don't want to just trade any old thing that kind of maybe looks okay. When we get into a trade, we want to feel like, yeah, I've nailed it. Doesn't mean it's going to go where we thought it would go, but we want to feel that way. Now, the first stock that we're going to take a look at here is Capital One Financial. I've got a 6-month chart up here. We can see the stock kind of was pulling back for a good part of the year. Some of those financial stocks really had a hard time. However, some of them recently have had a decent recovery. We can see some good support there at 176. And what did we see yesterday? We saw a break of the diagonal resistance line there. And today's just a little bit of confirmation it's continuing in that direction. Now, some people might like that for an entry. They might say, today's the confirmation and this move maybe was real, okay, as far as breaking through that diagonal resistance. Now, where might we say is a good place that we could put a target on this? We could put a target, here was a previous low here, but really the one up above it is up in this area. And I'm going to actually start drawing the line over here because it looks like that area has been some decent resistance, not only at this time frame here back in April, but also back here in February. Looks like it was acting as resistance a couple of different times. So that could be fairly strong as if and when the stock makes it up to that point. But could we use that 211 area as a target? Yeah, absolutely we could. So we're going to. And what we're going to do here is I'm going to write down the price of this right now. Stock is 199.43. Okay, we'll go 199.40. All right, we'll take an even number there. We'll take off that extra 9. That would be a little bit more accurate. And as we're discussing and calculating our reward risk ratio, we'll just keep that same price of the stock because it's kind of jumping all over the place. So what we're going to determine here first is, let's go ahead and put in our target. Let's put in our stop. And then we're going to put in what that gives us for potential reward and what potential risk is. All right. 211.21. We don't have to go all the way to the 21 cents if we don't want. You can always back off a little bit. Let's maybe just go to the 211 as our potential target here. And then what might, as we're looking at the chart, be a rational place to put the stop? Let's kind of zoom in here a little bit so we can see this a little bit closer. See if what I had in mind still looks decent. Nice big gap up candle day here. As we look at today's candle, it's a strong candle. The low is at 196. Now, we could put a really tight stop on here and say, okay, a few pennies below 196 could be a stop. I'd like to give it a little bit more leeway than that. And so I'm going to kind of come down here to where the closing price was yesterday. Closing price was 194.62. So we're going to just take 10 cents below that. That's going to be 194.52. Okay, so 194.52. We're going to put in a pretty tight stop loss there. Your stop that you might want on there, you might calculate it differently than what we're doing so here. Okay, let's go ahead. Oh, interesting. Let's see. Some of you are saying you have a Riceburg saying I have a calculation spreadsheet that I set up and many times don't use it. But some of those spreadsheets you might build for yourselves can be really helpful. Yeah, definitely can be. So let's do a little calculation here. We're going to be using the calculator a little bit. I'm going to kind of stick it over in this area. So with our target of 211 and our current price of the stock at 199.40, that would give us a potential reward of 1160. Okay, that's not too bad for a $200 stock. What would we be risking here? Okay, let's go back. Clear that out. And let's take our 199.40 minus 194.52, where our stop might be, and that would be 4.88. All right, so we're willing to risk 4.88 to have a potential reward of 1160. Now I'm going to ask you, is that good enough for you? Is that a good enough target to make the trade worthwhile? And go ahead, chat in your response. Kevin, you like to use your spreadsheet almost every trade? Fantastic. Yeah, you've developed maybe a little tool to help yourself. Now, as you answer my question, if it's enough for you, let's see what the reward risk ratio is here. So we're going to take our 1160. We're going to divide that by our 488. It's going to give us a value of 2.37. So 2.37 means for every dollar we're risking, we have $2.37 to gain. Now, many times traders will want that number to be at least 2, so that they have at least $2 to gain for every $1 they risk. There may be some situations when maybe you're willing to take a shorter target, and maybe it doesn't work out to be 2 to 1. Maybe it's say 1.75 to 1. But then you say, all right, at the end of the day, I'm going to move my stop loss up based on whatever the stock's moved, so that maybe I'll be having something closer to a 2 to 1 reward risk ratio. All right, so many of you are liking that 2.1. Zink says, what is the risk, what is the R to R? So it's for determining what our reward risk ratio is. How many dollars of potential reward do we have for every dollar that we're risking? Okay. And if you can get 2 to 1, a lot of people like that. If you can get 3 to 1, that's even better. 4 to 1, that's even better, but a lot less likely, although those could potentially be out there. So let's go ahead, let's place this trade, and we're going to put in a target and a stop. Now, over here on the trade tab for Capital One, I've got the August options open. We probably don't need 40 for this. Let's maybe just drop it down to 20. And a couple things we're looking for. One, we're looking for enough time for the stock to make the move, plus having a buffer. How long should the buffer be? A lot of people like 4 weeks or about a month, so that time decay from the start of the trade is a little bit lower than it will be as it gets into the trade, because time decay definitely gets kind of hotter, burns faster as we get closer to the options expiration date. Okay, so would, say, in an August time frame where the options have 66 days before they expire, give us enough time? Yeah, it would. Now, if somebody thought maybe they'd only be in the trade for a day or two, you might consider a shorter time frame. Maybe you might use the July options. These weeklies are not that super liquid, so we're just going to go out to the August options, and it's not bad to have plenty of time. Now, let's pick our strike price here. If we want to be more conservative with something, we might pick a strike price that's in the money. So that would be, say, 195, actually almost 200, 195, 190, 185. Okay, those are the ones that already have that intrinsic value. They're going to be more expensive. That's all right. And if somebody's wants to be a little bit more aggressive, they might choose something out of the money. One thing we're going to do in our class today, we're going to try to stick with at the money as close as we can. And if we have to err on the side of out of the money or in the money, we're going to go in the money. All right, but 200 is pretty close to where the price of the stock is trading right now. That's our at the money. And so we're going to go for this $200 price tag here. Now I'm going to do a right mouse click on it. I'm going to say buy custom. And we're going to choose that OCO bracket because that's going to allow us to put in a target and a stop. We'll just do one contract here in our position sizing. That should help us out. This first order is going to be our buy order, whatever the price of the option is right now. And then this top order is intended to be the target. And the bottom order, you can see there's a stop loss over there. The second order down is intended to be the stop loss. We're going to base this particular one, we're going to base it on the price of the stock getting to certain points to trigger our exits here. So on this one, we're going to change it to a market order. This one is also going to be in market order, but we're going to set it up so that it will be a stop. And actually, I'm going to change that. I'm going to go back. I'm going to do a first trigger sequential so we can put our target and our stop in the same order. All right, so this will be a market. We'll make it good till canceled, come over to the gear, and then we're going to plug those numbers in. All right, so we're going to say, all right, we want to get out when Capital One Financial, if it gets there, let's do it on the mark price. And if it gets greater than or equal to 211, that is going to be our target. And if COF, that in there, if the mark price gets less than or equal to, we're going to go 194.52, then we want to get out. Now I'm going to just come down here, make sure we've got the arrows going the right way. And in this case, we need to change it. We don't want it to be less than 211. We want it to be greater than 211, less than 194. Okay, it's always a good idea to go and check that. It's good till cancel. It'll trigger a market order, whatever happens to be the price of the option at that point. Whatever the going rate is what we're going to get filled out. The price isn't going to be guaranteed, which is why it's important we have enough reward potential to offset our risk. All right, we're going to hit confirm and send. We're going to send this one in. And we'll just let it go. Hopefully that'll get filled here. Muriel says, you know, it goes back to the Jesse Livermore saying, cut your losses quickly and let your winners run. That's what we're going to try to do here. Although it's nice to have a target. Could you change the target? You could, but sometimes it's like, if you put a decent target out there, you might be happy to just collect the money. It might be a base hit, might be a grand slam home run, right? Just kind of depends on what the stock does for it. The closer or the faster it moves to our target, yeah, the more likely it is that it would have a better gain to lock in. Now, are we just going to sit here for a week and just let it do its thing? We could, but these are the kind of trades you want to watch. Okay, you don't want to just kind of throw it in and go on vacation. Right? You want to be paying attention. Sure, we have our target stop and our target gain sitting there, but we're going to look at it. And say tomorrow, say we get a nice bigger move or even a decent size move on the candle, okay, on the price. We might consider going in and changing our stop loss, right? We might say, well, let's ratchet it up. You know, we're doing it here based on yesterday's closing price, but maybe we might want to change it to be the low of the candle on those closing days. Okay, so we're going to be adjusting the stops every day. Oh, it looks like, Johnny, did you get your question answered? How do you calculate the risk, please? The risk is whatever the current price of the stock is and the difference between that and our stop loss. Okay, so I was just keeping the price there at 199.40 because it was jumping around a little bit. And I was taking that price minus where our stop loss is going to be placed 194.52. That's how we got that. Okay. Now I'm noticing there is a survey out in the chat. You guys know we do surveys from time to time. If you've been with us here before, if you haven't been with us, all you need to do is just click on that little link and a survey will appear. You can just let it sit in the background till you need to go or class is over. And there's 2 questions, just fill in the radio button, plop, plop. You can do that. If you want to answer a couple questions for us, we love your information there. And I like to encourage you to use it to communicate something with me that maybe you're interested in having me cover, maybe something you're struggling with. Then I can incorporate your questions into our future webcasts. Okay. So James will post that there again, and we'll remind you before our session's over that that survey is there. But we always appreciate the time you take to do that survey for us. All right, let's look at another example. This one, let's see if this is still looking good for us. Visa. Now, I did a little calculating on Visa. I'm going to kind of erase that fib here. We'll put it back in, but let's remove the drawing for a moment so we just kind of see what's going on here. Another financial stock. What happened on it? You know, we could have had, let's see if this will work for me here. It could have had an inverse head and shoulders pattern on. Okay. Maybe we'll use this drawing tool here. And we might have seen something, it usually is preceded by a downtrend, but we're seeing something that maybe is a little bit interesting here. Oh, we better get a better color than black. Let's go with white. Okay, where we have kind of something that looks like a shoulder, and then we have a head that goes down lower, and then usually we'll look for this other shoulder to form here. And usually, again, it's at the bottom of a downtrend, but it's got a kind of a similar pattern here. And what are we seeing? It's breaking above that 326 resistance level. Now, there are lots of different ways that we can set a target. And so one of them can be setting up a Fibonacci. One can be, where is their prior resistance, like we did with first or Capital One. However, we're going to use the Fibonacci. And so I'm going to go ahead and, without going into a lot of detail what Fibonacci's are and the mathematics behind it, essentially there are some ratios that have a tendency to play out in nature. And they found that they also play out in stock charts. They play out in programming. They play out in your thumbprint and in sunflowers, these little ratios. And so we're going to put on, I'm going to just click on my icon there for my fib, and I'm going to go from a high point to a low point. So we're going to go to this most recent high and take it down to that most recent low, and it's going to draw in those ratios for us. And what we can determine is if maybe the stock might be using some of those levels of support as support and resistance. Now I'm going to zoom in here. And this thing is moving still pretty strong here today. And it looks like maybe it had been around down to this 50% retracement area today. And it's busted through this 61.8% level. It doesn't have much more to go to the 78% level. So this might be a little difficult to say, well, let's only put a target here. We need a little bit bigger target on it. So we're going to go for where the top was here. Looks like that's about 342 here. The Fibonacci also is drawing in a much bigger target up here, which could be eventually maybe where the stock goes to. We don't know. But for right now, that might be a little too optimistic of a setup. So we're just going to go to this 342-ish area. All right. And let's go put things in here. So current price of the stock, we're going to say Visa at 332.10. And we're going to put in our target. And let's do it. We can back off that a little bit. What if we go to, say, 341.90? 341.90. Okay, and that's going to be our target. What about a stop? What should this stop be in this case? Let's see if this still makes sense to do. I was looking at the bottom of today's candle and I was thinking, you know, I would not want it to retrace all the way down there. But a technical principle is sometimes the midpoint of a large candle could act as support. In other words, you know, maybe tomorrow, maybe the stock pulls back a little bit, but it's not if it acts as support, then it will maybe stop about midway through the candle. So instead of going all the way to the low here, I was going to say, well, I'm going to pick maybe a lower part in the candle, more than halfway down. And let's see. Oh, this is pretty close to what I had put in my notes here. This is saying 327.71. So 327. My notes, I had 59. So we'll go maybe a few cents lower, give it a tiny bit more leeway. Okay. That's where we're going to put our stop. That's what we're going to put as our target. Now let's see if it's good enough. Let's see if we get a good enough reward risk ratio here. Okay. So again, we'll calculate our reward. And what are we going to do? We're going to take the price of what we were using on the stock, 430 or 332.10 minus whatever the target is, 341.9. It's going to give us a reward potential there of $9.80. All right. How about the risk now? We'll go out to the next row for the risk. The risk is going to be that current price of the stock. Okay, so the 3, come on back here. Oops. Let's go 332.10. Take the difference where the stop is going to go. And that stop, we're going to put at 327.59. That's going to give us risk of about 451. Okay, did you guys follow that math there? You know, if you want, you can adjust your price to this fluctuating number here. I just wanted to keep it stationary for simplicity purposes. Okay. All right. Does that give us a reward risk ratio that's at least 2 to 1? Well, those of you that are eyeballing it are going, it's going to be close. All right. So we're going to put 980, divide that by 451. And that gives us a 2.17. So again, we're going to start out that as our reward risk ratio, $2.17 to gain for every $1 we're risking. But again, we're going to adjust our stop loss. What if, for example, say tomorrow the stock, let's suppose it continues to move, which we'd like it to do, it's having some good momentum here today. You know, say it closes somewhere above this retracement level, the 78.6. Well, we might consider using just a little bit below that as our stop loss number to move the stop up to. Okay, so we're going to be really active with this trade. Let's see. Ricebird says, you know, the other day you used a % target for a gain versus a stop loss on the order setup. Can you show that again? Oh, I know what you're talking about, Ricebird. You know, we can do that. We could do that maybe on our next example. I don't want to change up our current example here, but yeah, I'd be happy to show you what Ricebird's talking about here. All right, so let's go plug in our trade. Again, we could pick something shorter. We want enough time for the stock to make the move and that 1 month buffer zone. So we're just going to go down to these August options. If you know, like the numbers you were seeing in the July contracts, great. They're a little too low for what I'm looking for. So that's why we're just going to go out to the August contracts. We're going to go at the money. Which one's at the money right now? 332.25. Is that going to be closer to, let's see here, 330 or 335? Oh, I think it's a tad closer to 330. Okay, so it's going to have a little bit more intrinsic value. So we're just going to go for this August 30. And actually, let's do right mouse click and say by custom, and then we'll just choose with stop, but we're going to change it. Okay, we're going to change this to a market order. And then we're going to put in the price of the stock on the next screen. We'll go click on the gear. We'll do the same thing that we did before. Okay, if Visa, if the mark price gets greater than or equal to 341.90, that's where we determined a target could go. or if VISA is less than 327.59. Sure that gets in there. Let's make sure our errors are going the right way. Greater than or equal to or less than or equal to 327.59. Great. We'll be happy to get out. And again, we're going to adjust that stop loss along the way. When we get into a situation where it's a little bit more profitable, yeah, we're going to tighten that up. All right. Going to send that one up and on its way. All right. Chris, let's see. Oh, Chris is helping me out here responding to Zinc. Thank you. Appreciate that. All right. Next up, we're going to see how many of these we can fit into our class today. But before I do that, I want to make sure that you're following James and I on X. Okay. I am Connie Hill CS. James is James Boyd, Mr. Aloha CS. Okay, Lisa, Mr. Aloha. James Boyd CS. And we'll post educational content out during the day. Another thing that's helpful, especially for those of you that are maybe a little bit newer, is to subscribe to our Trader Talks channel, right? Shows you what's going on. Next up, we're going to have getting started with technical analysis. Barb Armstrong is going to lead that discussion. She'll be up next, and then you see the rest of the day. Let's see if Mr. James Boyd is on here. Would you look at this tomorrow? James will be teaching growth and value stocks. I know there are a lot of you that like that class that might want to do that, but it lets you find our playlist, helps you go back, look at our content, what we've got going on. We're doing some short videos for you. So James and I did some recent videos. James did his on seeing trends faster, little 10-minute video. And I did one on organizing your Thinkorswim platform like a pro, using a lot of detached functionality, showing you how that might work. Okay, so check out those short videos as well. All right, next stock up, and we'll honor what Ricebird was interested in here. MO. All right, what have we got going on with Altria? Well, it looks like it's in a triangle, right? We've got the highs, or the lows getting higher. Nice little bounce off there today. And then we're seeing the lows, or the high points, are getting a little bit lower. So it's forming this nice ascending triangle. And sometimes a place that somebody might want to get in on a bounce on this triangle, or I should say in the triangle, is when it's bouncing off that support. Because we'd look at this and would say, hey, is there some room for this stock to go? Oh, absolutely. There's some nice room for this stock to go. But, it might be a little bit lower than, what the line was hitting up here, hitting up there. All right. Well, let's go ahead and figure this one out. So on MO, what would be a good target? Well, I'm going to suggest the target be up here against that diagonal resistance, but maybe a little out in time. Okay, so maybe let's just go out here a few days and see where that lines up. It looks like 73.76. Okay, so yeah, we're going to use that for our target. Could it go past it? Well, we would hope so. At some point, we're wanting the stock to break out of the triangle. Is likely to go bullish because the previous trends have been bullish, but never guaranteed. Now, when would we know we're wrong on this? When would we know, oh, the stock is not following through with that bounce? Well, it would be if it were to come and close below, or go significantly below this support area. So let's give it a little space here. Okay, let's give it, I'm going to just kind of do it with my eyeball. Okay, we're going to give it to about, let's go, it could be a few days out here too that maybe it would do it. Let's go to 69.10. Okay, so we're going to put a stop at 69.10. Each of these trades has a little bit different calculation for the stop and for the target. And I kind of liked that because you see different variations in the stocks that you're looking at. And you don't always have to go pick out the previous resistance. You don't always have to draw Fibonacci, okay? We can use some of these things that are kind of sitting in the chart here, like this triangle. All right. So we've got our target and our stop. Let's figure out our reward and our risk. All right, let's go ahead. Let's grab our calculator here. And on here, let's just kind of see what we have going on here. We've got 73. Oh, I didn't write the price of the stock down. Let's go, where is it right now? 70.13. Okay, let's base all of our calculations here off of 70.13. So 70.13 minus the target of 73.76 gives us about 363 of reward. And then on the risk, we're going to take the price of the stock, 70.13 minus where our stop loss would be 69.10, $1.03. Okay, so that's really a pretty tight stop, 103. We do the whole reward risk ratio. What are we going to see there? Is it going to be better than 2 to 1? Yeah, it should. 363 divided by 1.03 is $3.52 to gain for every $1 that we're risking. Okay, so do we have a decent setup there? We do. Now, what Ricebird wanted me to show you was something we did in a class for some short verticals, and it worked really slick for short verticals. However, we could adapt it to our scenario here. So let's go figure it out. Let's go to our August options, which we don't have. So we're going to have to use September in this case. I don't think there's a, let's see, stocks is 70 at 125 actually is not bad for open interest. We're just going to do a couple of contracts on this one. So that one would not be too bad. Would give it maybe about 15 days to get to the target. So a couple of weeks and still give us a buffer. If somebody wanted to say, I just feel more comfortable coming out here to the monthly, then we could do that. Let's see here. On the 70, it's 340 here, 375 here. It's not a ton of difference for that extra time. We're going to go with the Septembers. Okay. So September 70. And then let's do a buy custom with an OCO bracket. And again, we'll use the top one as our target, the bottom one as our stop. And what I showed how to do in this scenario, let's see if this will work here. That is a call. That might not work so well here. I'm going to do this a little different way. I'm going to go ahead, I'm going to put in the call option we're interested in, and I'm going to put in a first triggers OCO, and I'm going to build it from scratch. So we'll create opposite order. There we go, create opposite order. So kind of you have to build it from scratch rather than using an OCO bracket that's pre-formatted for you, okay? The key here is getting this little man. And we're going to change that to a trigger. And on this trigger, we could make it kind of dynamic, which we could say, all right, if we get twice the value of that option, I know on our reward, we're looking for $3.63, but I'm going to show you kind of the dynamic nature of this particular way to do this. We could say, and let me get rid of this side here for a minute because I want you to be able to see this well. We could say, all right, if we get a certain percentage of whatever we get filled at, if we get 200%, if we get 300%, whatever number we might want in there, I think I'm going to start us out, even though our reward risk ratio is a little bit better than that, we're working with an option price, not the stock price. We're going to put this in here as 200%, okay? Which it's going to be based off of this fill price here of 380. So when it gets percentage-wise above 200%, make it good till canceled, get us out of the trade. Now here on the bottom one, what if we're down, say 50% on the price of the option? 50% of this, we're going to do the same thing, similar thing here. We're going to make this be a stop here, and then we're going to change it to the trigger. And then we're going to put in the percentage. And in this one, we're going to go minus 50%. Okay, so the price of the option minus 50% is where it would stop us out. And then twice, well, 200% of the value of the 380 is where it would stop us out there. So it's going to calculate it for us automatically. We want to make this good till cancel as well. And what I was showing in the class is if you're a creature of habit and you like to do the same thing every time, you could create this as a template. You'd come over here to this button that says Save Custom Template. It comes up and gives it a name that it comes up with. You don't have to keep that name. I might keep the first triggers OCO and put this as long. I'm going to call it a single. And then I might put 200-50. And all that stands for is looking for a 200% gain in the price of our target and a 50% stop loss in terms of our stop. Okay. You call it whatever it makes sense to you. On this, let's go ahead and save it. I actually wanted to do 2 contracts here, so let me just change this up a little. And I'm going to resave that template because I'm going to save it with the 2 contracts. All right, so we just kind of resaved it there. Okay, we're going to send it in. We're going to let this order go. Same thing, but we might want to consider maybe adjusting the stop if we get into a situation where we're moving in on some gains and we're not willing to give a lot up, less than 50%. We want to change it. Okay. So that's just kind of a little extra bonus for you here today. Thanks to Riceburg. You can thank Riceburg for that. All right. So question on COLA says you wouldn't worry about the moving average overhead. Not so much because we're not trading the moving averages. We're trading the triangle. When you trade price patterns, you're kind of ignoring everything else. And so some people might even take the moving averages off. We're simply focusing on that triangle price pattern. All right. Great questions you have here. All right. So a couple of asks as we finish up here. One, if you're new to long options, you're trying to get a good handle on it, you can try any of these example trades and do them in your paper money account and practice so you get comfortable. You might only maybe say practice one way. Maybe you only look at it and say, I'm just going to look to try to get the previous high. That's just fine, right? But just practicing will help you. We did have a survey out there today. James has posted that in the chat there again. And so we always appreciate it if you take the time to fill those surveys out for us. Again, I will read everything. Scott Thompson, one of our managers, he will read every little word. We hang on those words. And like I said, I like to include some of the situations that you have and questions you have. I like to put them in our upcoming sessions. So feel free to use that real estate for that purpose there as well. If this is helpful to you today, hit the like button on the way out. James and I would love a follow. Connie Hill CS, Mr. James Boyd CS. Actually, it doesn't say Mr. in front, just James Boyd CS. All right. Now, coming up next, like we saw, is going to be Barb Armstrong. She's going to be getting started with technical analysis. She might even mention some of these things we saw here today. So take a nice little break. We'll follow up on these trades next week. And like I said, I'm going to be watching them throughout the week. So we'll see you next week. Bye-bye.